Hello learners, welcome back. Today we'll be opening ledger accounts step by step. And learners, kindly before we continue, if you're watching this and you've not subscribed, please do so. Also, you can share with your friends, like and comment on what you'd like us to discuss next. So our today's question reads, record the following transactions in the relevant ledger accounts for the month of June 2009. So June 1st, you're told that invested 100,000 shillings cash in a retail business. On June 2nd, obtained a cooperative loan of 20,000 in cash. And on June 3rd, bought furniture 70,000 shillings, paying 40,000 by check, and the balance was paid in cash. So learners, first and foremost, before you proceed into opening your accounts, the first thing we need to do is to identify the affected accounts in each and every transaction. So we'll start with the first transaction, whereby we are told money was invested, a total of 100,000 shillings in cash in a retail business. So here we have two accounts that have been affected. Investing money. So this shows capital account. It's a capital account. Then this money is in cash. Therefore, the cash account. So when we will be opening our ledger account, learners, what are we supposed to do? Now, any increase in capital is supposed to be credited, and any increase in cash is supposed to be debited. And learners, looking at that clearly, we've been able to fulfill the law or the policy of double entry, the rule of double entry, whereby in one transaction we have an account to be debited and an account to be credited. So we move on to our next transaction, whereby a loan was obtained from a cooperative, and it amounted to 20,000, which was issued in cash form. So therefore, again here we have two accounts that have been affected, and one is a cooperative loan account, and also we have the cash account in which money was received. So therefore, how do we treat the two? Cooperative loan, that is a liability. Any increase in liabilities, increase in capital is supposed to be credited. Any increase. And we debit any decrease in liabilities or even capital. Again, any increase in assets, yes, any increase in asset is supposed to be debited, and any decrease in asset is supposed to be credited. And this is where, yes, also the expenses will follow in this category. The same case to revenues will follow in the category for capitals and liabilities. So we move on to our third transaction and the last one, whereby we are told that a furniture was bought amounting to 70,000, and it was paid partially by check, and the balance in cash. So we have how many accounts? What was bought is a furniture. So we have a furniture's account, furniture. Also, this furniture was paid in one using a check. Where do we get a check from? The bank. So we have a bank account there being affected. And lastly, we have the balance that was paid in cash. Hence, cash account is also affected. So how do we treat these accounts? So buying furniture, it means we are increasing furniture in the business, and furniture is an asset, and we've just said that any increase in asset is supposed to be debited. So therefore we open a furniture's account and debit the same. Then bank, money is being paid for the furniture through the bank, meaning that the amount in a bank has reduced by 40,000. Any decrease in asset we credit. And again, the other balance, lastly, which is about 30,000, which is 30,000 shillings, also reduces as is supposed to settle to make payment for the furniture. Therefore, we also credit the same. So if you total these two, you're going to get 70 and the debit will be 70. Therefore, completing the rule of a double entry. So we move on. The next thing is to open our ledger account. So a ledger account has a debit and the credit side, debit and the credit side, whereby on the debit side of each ledger is treated differently according to the class of the account. For instance, if it's an asset, any increases will record them on the debit side and any decreases on the credit side. For liabilities and capital, we will do the opposite. That is, we credit any increase and debit any decrease. So we move on. The first item, the first account we have is capital. So we have capital account, and in every ledger account has, as we have said, has a debit and the column side. In each and every side we have the details column. You have to show the details column, not the details, sorry, but the date column, the date column, then followed by the details. Then we have the ledger folio, the amount, and we have this double slash here, that separates the debit and the credit side. Again, a replication of the same date, details, ledger folio, the page, and the amount column. Sorry for that. And the amount column. Yes, so for our capital in this case, we have our capital account. Yes, we said in this specific transaction we are going to credit. Why? Because amount invested increases capital of a given business. So where in which form are we getting our investment? That is cash. So that is the details we are going to record. And the date was June 1st. So we have 1st 6 2009. We have this money came into this business in a form of cash. Yes, and it was amounting to 100,000, and that is it. We are through with the first account. Then we go to our next account, which is cash. We have our cash account. Again, you show the credit and the debit side. You show the credit and the debit side. We have the date column, the details, the ledger folio, amount. The same case on the the credit side, sorry, date, details, the ledger folio, and the amount. So we move on. We agreed that we are going to debit cash. Yes, there is increase in cash. Money has been invested in this business. So on the same date, 1/6/2009. Yes, 2009. Money has been invested, yes, in form of capital. Remember, we write on the details column, we write the other affected account, and the amount was 100,000. And that's it. We are through with the first transaction. Then on to our second transaction. We agreed that we are going to open a cooperative, a loan account, and a cash account. So in this case, we write cooperative loan account. we show the credit side and the debit side. Then name your columns, whereby the first one is date. We have details, the page, which is the ledger folio, and then we have the amount, replication of the same, date, details, ledger folio, and finally the amount. Yes. Back to our question, back to our transaction. Yes, a cooperative loan of 20,000, which was given in form of cash. So in this case, the loan, we said loan is a liability. Yeah, a loan is a liability. So increase. Hence, we credit on which date? 2nd of June 2009. The details therein are supposed to capture, yes, this loan was given in the form of cash and it was amounting to 20,000. Then the other affected account, of course, will be cash. And because learners, we already have a cash account here, there is no need of opening another one. So we just feed the details in regards to cash account on the same account. No need of opening another one. So we move on date 2nd of June 2009. Yes, where are we getting this cash from? The cooperative loan. Cooperative loan. Cooperative loan, which was 20,000. Which was 20,000. 20,000. Yes, 20,000. Then we move on to our last transaction. Our last transaction, which says bought furniture 70,000. Paying partly by check and the balance in cash. So first and foremost, we have a furniture's account. We open the furniture account. Yeah, we start by opening the furniture account, which was bought. Yes, furniture account. Remember to show the debit and the credit side, and also to name your columns. Date, details. We have the ledger folio, the amount, date, details, ledger folio, and the amount. So in this case, furniture was bought. This is an asset increase in furniture in this business, which is amounting to 70,000. Yes, so in our details column, we have to show that. So the date is that 2009. Yes, that, not fifth, but that. Yeah, furniture. How was this furniture paid for? How was it paid? It was paid through bank, whereby bank was 40,000, and also cash. It was also paid on cash, which was 30,000. Yes. Yes, that is how learners you're supposed to break it down. The question clearly says that it was paid partially by check of 40,000, the balance in cash. That is why you're supposed to break down. You have to break down, yes, like that. Then we open the bank account. Previously, did we have one? No, we do not have a bank account. So we proceed and open a bank account, where this is our credit side, this is our debit side, this is our date column, our details column, our ledger folio, the amount column. We have the date, details, ledger folio, and the amount. How was this money used? It was used to pay for furniture. How much? 40,000. 40,000. So we record the same here, that on a 3rd of June 2009, yes, some amount was taken to pay for the furniture. That's why we are crediting. It's a decrease in a bank account, which is amounting to 40,000 is what was taken to pay for the furniture. And finally, the other account is the cash account. And remember, initially we had a cash account up there, so there is no need of opening another one. And yeah, so we write our date as 6/2009. Yes. And how was this money used? It was used to pay for the furniture, 30,000 shillings. And you look at that, we are done, learners. That is how you're supposed to go about this type of a question. Always remember when opening ledger accounts that you must fulfill the rule of a double entry. Bye for now. See you in our next question.